Hi there, and welcome to Sketchy Finance, your go-to doodle show to learn about taxes and accounting in plain English and doodles. Today, we're talking about tax deadlines. In the US, besides Christmas, our favorite date of the year is April 15th. Of course, I'm joking, but it is a date that's important to every American. It's the day our personal tax returns and payments have to be submitted to the IRS. But did you know that's not how it started? In 1862, Honest Abe Lincoln was caught in a little kerfuffle known as the Civil War. In desperate need of cash, Lincoln created the office of the Commissioner of Internal Revenue. To fund the war, Lincoln introduced the first ever income tax, a cool 3% on incomes over $800. It was supposed to be temporary, like that free trial subscription you forgot to cancel. Well, it was and it wasn't. After a series of changes and legal challenges, it was eventually ruled unconstitutional. Jump ahead to 1913 and changing times in the US. That's when the IRS hit the big time, thanks to the 16th Amendment. Congress finally got the green light to tax incomes directly. The IRS, now with legal authority, evolved from a small-time tax collector to a full-blown financial juggernaut. The original tax deadline was March 1st, but when the paperwork started piling up higher than Mount Everest, they pushed it to March 15th in 1918, and eventually to April 15th in 1955. Since they figured small businesses actually had accounting records and should know this stuff, they left the small businesses just to deal with the March 15th deadline. As the tax code grew more complex and the IRS bigger and bulkier, there became more complaints about being able to get everything completed and filed on time. In the 1920s, taxpayers were able to request one-up exceptions that were occasionally granted by the IRS. Today, extensions are easy and standardized. For the most part, you automatically get an extra 6 months to finish your paperwork, but not your payments. If you're going to owe money, you still need to make an estimated payment by either March 15th or April 15th deadlines. So let's talk penalties. There are two major types of penalties, and they're a bit different for individuals and businesses. Failure to file means you did not submit your paperwork, while failure to pay means you did not send your money. As an individual, if you don't file your return by April 15th or get an extension and file by October 15th, the failure to file penalty is 5% of the taxes due, up to a maximum of 25%. If you don't make at least 90% of your payments, you'll be subject to a failure to pay penalty, up to 25% of the unpaid taxes. Did we mention interest as well? Federal short-term rates, plus 3% compounded daily. As a C corporation, you get to wait until April 15th as well, and essentially face the same penalties as individuals for both failure to file and failure to pay. As an S corporation or partnership, your deadline is moved up to March 15th or September 15th with an extension. Your failure to file penalty is a bit different also. You're subject to a monthly penalty of $220 per shareholder, up to a maximum of 12 months. With all that said, we're at the 30 to 60 days until deadline mark for extensions this year. September 15th is right around the corner, and the Halloween decorations are already on the shelves. Get your taxes finished up quickly if you haven't already done so. If anyone needs help, you can reach out to us at Accent Financial Services. Shoot us an email at info@accentfinance.net. Find us online at www.accentfinance.net. Give us a call at 972-442-5020, or find us on social media and say hi. If you found this video fun and interesting, give us a like and subscribe.